Hey traders, happy Tuesday everybody. Let's get a quick audio and video check in. Should be good to go. Let's get to our pre-market prep. Bell's going to ring in about 10 minutes. So just a couple basics. We always want to have good habits in the morning, right? The morning should be a very specific set of processes. And a lot of people ask, Rog, how do you get ready for the bell? Well, number one is to have the things that I want to keep an eye on already listed, already ready to go before 9:30, right? Not process all this stuff at the bell. And I'll tell you, it takes about 10 or 15 minutes. So I don't want anybody thinking this is going to add a significant amount of time to your process, but it's prep that most traders sadly will fail to do. And it's really simple. So first step is go take a look at the economic calendar. And there's an economic calendar that I really like at two websites. One is forexfactory.com. You might say, Forex, Rog? Yep, it's a great international calendar to take a look at. And I actually prefer that one the most because it really highlights the major events. And it also gives a trader who may not know, well, is this really important or not? It color codes the higher impact events. So you don't have to guess at which one might be more important than the other. Another one that I would use if you're more of, you understand the macroeconomic impact of certain names, which you'll learn within less than a month. We highlight them here in the room. One of those would be the durable goods release. Anytime the word core is in front of a release. For example, you'll see at Forex Factory, there's a durable goods and there's a core durable goods. All right, Rod, why are there two of kind of what seems to be the same thing? And the main reason is anytime the word core is in there, they're removing certain metrics. There's certain things that they're not going to consider. So if you take a look at durable goods, just so you know what we are, these are the change in the total value of new purchase orders placed with manufacturers. All right, so we get an idea. What's the total order of new stuff, right? And a lot of times the way people will look at this is if that is rising, that means purchase orders are rising, and that means manufacturers are going to make more stuff. That makes sense, right? So then why core? So core is going to exclude something. And what they exclude is transportation. So if there's more purchase orders around transportation, it's going to exclude that. So core just means we're excluding something. All right, we also had FOMC Barkin. Now, Barkin did not have much of an impact, as you can tell from the, we had some typical movement, but we're still pretty much range bound. And Barkin basically had a speech before, and it was the same text. So the same text for the speech, after a while, people realize, oh, we've heard this before. It's nothing new. Nothing new typically means no new reaction either. Barkin started speaking at 8:30, and you can tell, the markets were already bouncing up a little bit at 8:15, and you can see both durable goods or core durable goods. They both get released at the same time, and Barkin a little effect. The bounce that started at 8:15 still intact on the S&P. Later on this morning, we're going to have consumer confidence. Well, think of it this way. If Powell just basically shined a big spotlight on the consumer by way of employment, you might say, Rob, employment's part of the consumer? Kind of, right? If the consumer has good jobs and higher wages, it's going to be presumed that they're going to buy more stuff. So this is a little bit down the sort of food chain, but part of looking at jobs does put a highlight on consumer activity because we're presuming that more people employed will be buying more stuff, and that's going to land in different retail sales and consumer confidence numbers. So maybe a little bit more important, a little bit more than normal because of Powell basically using concern about the labor markets to justify why there is a higher expectation for a rate cut on that September 17 meeting, which there is. It currently, before the bell, was sitting just above 86%. Remember, anything over 80 can be viewed as fully discounted. We expect it. So either he's going to talk it down between now and that third week of September, or we, meaning investors, traders, we're going to operate presuming rates will be a quarter point lower. So we've got consumer confidence and the Richmond Manufacturing Index, kind of same bucket of interest as, say, the core durable goods and the durable goods would be. So just manufacturing activity. This Richmond Manufacturing Index is simply not the manufacturing of Richmond, Virginia, but rather the Federal Reserve Bank of Richmond has their study. And it's just basically a composite that they create from surveying manufacturers in Richmond. Yes, but they're going to use that as a kind of use case example of what might be improving conditions if it's above zero, or worsening conditions if they're below zero. All right, and that's coming out at 10. Now, they've been negative 20 and negative 11. The forecast is for negative 11. The previous was negative 20. So no one's expecting a big number here. So it's not as if that zero above or below is the big metric. Is it higher than 20, which was the previous release? And is it higher than the negative 11, which is what's expected? So good would be above negative 11. Negative 10 would be good. We're not looking for a above zero number. That's where we are right now. And that's what we'll be dealing with. Bell's going to ring in about 3 minutes. So let's get into what's moving, kind of news, if you will, sentiment, how traders are feeling, bullish or bearish, scared or greedy. The firing of FOMC Cook did move the dollar and treasuries a little bit, not significantly, but anything around voting members, anything around the Federal Reserve is going to cause some upset. And clearly, most of that's been shaken loose. We'll see what happens as we go along. We talked about the expectations for September 17 and already barking. So let's get to our pre-market look. A couple of things I'm noting. One, all but the Russell are below the previous session close. And as of right now, as of 9/27, the RTY from a day trading perspective, which means I'm looking at the 5-minute chart to assess this. All our day trades are coming from the 5-minute chart and the 5-minute chart alone. So I'm not looking at other time frames to confirm. I'm not looking at other time frames to assess. It's just what the 5-minute slice of psychology is telling us. And that right now is in an uptrend. So we have an uptrend in the Russell. You can see here, not only is price, let me grab my drawing tools here. Not only is price above the previous session close, the trend, so here's our previous session close right here, and you can see the trend and the momentum, but usually momentum, bullish momentum, tends to precede a trend. And you can see that we have a trend now which was forming in the last 15 minutes. It confirmed during this very candle. So we have an uptrend in the Russell. Now that might set up a trade, maybe one of the earlier trades we get, because if the Russell, now that it's in an uptrend, can pull back to this area right here, which is our wave, that is just another way of identifying what the pullback support would be, coming back down to an average. And oftentimes that's, hey, Herman, yeah, we don't make any comments on, I appreciate everyone's opinion, but it has nothing to do with trading. Yeah, we don't make any comments. I'm just telling you what's out there news-wise. Yeah, so we keep the politics out of the room. All right, so whether they can or can't is irrelevant. What we're looking at is the psychology. Does that make sense, gang? It's not my place to judge whether something is legal, not legal, can be done, can't be done. Remember, that uncertainty is going to play out mostly in treasuries and in the US dollar. All right, so if we get a pullback on the Russell to the mean reversion, right, that would be in the context of a trend. That might be the first thing I'm looking for here this morning. So definitely makes sense here to keep an eye on. I'm going to still let about 5 to 10 minutes go by, but that Russell wave entry is something to watch. I'll be watching for that setup. And remember, whenever we have the wave, right? Whenever we have the wave, it's dynamic, right? So that level is not moving horizontally. It's moving at an angle. So every 5 minutes, it's going to have a slightly different read. The first level at which it'll hit it will be around 2347.2. It's going to overlap with the previous session close around 23.46. We know a candle of unusual size. The reason I'm watching it is, and not just saying, hey, let's jump in, is because I want to let a little bit of the spread narrow for the IWM, which is what I would be setting up for the room. So we'll watch the Russell futures and then we'll trade that IWM. So since the IWM has just started, right? Since the IWM has just opened, that volume is basically now building up from zero. The spreads will be wider, and it makes sense to wait at least 5 minutes to let that initial wave of participation, volume, opinion, sentiment, flood in. And that's where we get some of those large candles at 9:35 that are not necessarily indicative of what we're going to get for the remainder of the morning. So see that large candle coming in on the Russell? Yeah, we'll be patient. Another level that I've got my eye on is in, I was looking at silver and I was looking at bonds as well. So let me take you to SI. And then around 9:40, we'll start dialing into which sectors are outperforming within the indices, and then individually which stocks are outperforming within those sectors. So one of the things I'm looking at in silver is potentially, even though it's below the previous session close, is potentially a Darvis support level. Now, I don't love it because we're below the previous session close or in the bearish sentiment of things, right? So I'll keep an eye on that. Not top of the list, but it does at least have a level that we could consider. The other one is Bitcoin. So let's jump on over there. A lot of questions about Bitcoin. Remember, over the weekend, there was I think it was 24,000 and change Bitcoin that were sold. Worth 2.7 billion. It hit the ledger and it created a little bit of, I don't know if you want to call it a flash crash or a pullback. But remember, Bitcoin's been weak for a while. It's not as if that sale over the weekend of the Bitcoin whale triggered the weakness. We have been weak. But from an intraday perspective, Bitcoin is above the previous session close here at 9:32. So notice I'm just whittling away the vast choices we have to things that are setting up in a way that have higher probability. So as long as Bitcoin's moving sideways, it's neutral, and it's above the previous session close, above the PSC, right? I could keep an eye on that Darvis, but you can already see it's not super respected. It's not as if support's coming in at the Darvis and maybe we get some wicks below it. So it has kind of very weak Darvis support, but that could be something worth watching going forward. But at the moment, you can see we're getting support around that area, but not specifically at that level. But again, something that's worth watching as Bitcoin maybe recovers from the sell-off triggered by those 24,000 Bitcoin sold. All right, then we move on to bonds. Bonds are doing something similar, same kind of idea around a Darvis support level. All right, and so in this case, unlike Bitcoin, which is above the previous session close, you'll notice that bonds are below the previous session close. So while this is a support level, it's going to be a little trickier because being below the previous session close is generally something slightly bearish, but this is support all the same. So you might say, Rob, would that be valid? It would, but I would adapt to the reality of that support level being below that sentiment line in the sand by smaller position size and a tighter stop loss, right? So smaller position size, smaller number of dollars allocated, and less position size. Just to acknowledge that this is valid, but it's not ideal. The more ideal something is, the more I'm willing to put a little bit more risk within our predefined parameters as possible, right? So those are all things to keep in mind. All right, next up is, let's see here. Yeah, Jay mentions that silver futures are rolling. And yes, there's a date at which the roll date occurred, right? The date at which we start to see the roll. But there's also leading into the date, you'll see the migration of open interest will precede the actual date. So great point. And remember that the futures may roll and the open interest might migrate, but the SI or whatever continuous contract you're using, notice I don't specify the month. I usually use whatever the front month is on the chart. Different brokers will roll with slightly different dates, usually within a few days of each other, but they won't all roll on the same date, right? So it's going to be our job to determine if we want to continue to trade the front month or sort of the next front month. And what's going to predict that is actually volume, right? So where is the volume right now? Is the volume active in the next front month or the current one that's getting ready to expire? And that's just and I'll show you a little bit later on how we can do that really easily. And you can do that on your broker platform as well. I think Bot shared an image in the room. And right now, let's see, I need some new glasses. Let's see, the U contract and the December. So September and December, most of the volume is still in the U, which stands for September contract. And that's specific to those of you that want to trade futures. Otherwise, we'll just watch the front month, the futures contract that I have on the screen, and then we'll trade SLV if there is a setup, which I don't see one at the moment, but we'll definitely keep an eye on that. Thanks for that, Jay. All right, next. And yes, shenanigans can be partly migrating from one contract to the next. The end of a contract can be very different than the beginning or the activity growing in another. So yeah, shenanigans for sure. Same thing with bonds. Yeah, same thing with bonds. Remember, we'll be trading TLT for bonds. We'll be trading IWM for Russell. We'll focus on the futures alternative in the ETF. And partly the reason I really advocate for that, especially if you're a new trader, to futures, is futures are highly leveraged and relative to the ETF options, very much more volatile. So there's more risk. There's more reward, but there's more risk too. And the way I look at it is if you want to eventually trade futures, and by the way, futures are my first love. That was my first foray into active trading as a teenager. They're my first love, no doubt. But they're not for the faint of heart. They're not low risk relative to the ETF. So what I would say is start with the training wheels. So if we're going to trade NASDAQ, for example, if I were interested in the support level right here on the NAS, number one, I would trade the QQQ. And in this case, it'd be QQQ calls. Eventually, when you get good at this, notice we're going to watch the NASDAQ futures while we're trading QQQ calls. So I'll pick the at the money strike for the QQQ calls, but we'll watch NQ. So this is really slowly training any trader who wants to eventually trade futures to watch the thing that they eventually want to trade. But I'll also say for those of you that have no interest in trading futures, you still want to watch the NQ because this is the more 23-hour version of the NASDAQ as opposed to the QQQ, which is only that slice between that chunk of time between 9:30 and 4. Remember, futures are trading far past 4 and they're trading far before 9:30. And there's only a 1 hour nap that market makes. So you've got a much more fuller amount of information. You've already got volume. You've already got price action that our indicators can already crank through and give us information about that symbol. So anytime you're trading an ETF that has a futures alternative, we want to actually watch the futures. So this is the level that I'd be looking at for the NAS. And because it is below the previous session close, we're now about 10 minutes in. So yeah, I mean, 5 to 10 minutes in, we can start looking at normalized volume, normalized spreads, and we'll keep an eye on that. Now, yeah, that low, yeah, was probably pretty much what I look at for a trigger on the NQ via QQQ for a buy. It wasn't very quick, and it would have been very difficult for a futures trade for an options trader to grab that. But let me just mention, if you are more seasoned, this is just a limit order to buy at this price. That's all, and that's the best way to get the fill. That's a limit order to buy at that price. Being below the previous session close, I don't feel as generous with maybe the lower eighth of the Darvis. So this is the lower half, lower quarter. I'm not as generous, but you can look at the lower eighth in this area for the long QQQs. So let's see if we get back down there or not. But again, being below the previous session close, not ideal. But here's what I want to remind everybody. If you could remove the bad idea, inversion, right? If you could remove the bad idea, which is selling or buying puts down there, we're going to be far better off, right? So don't buy puts. Don't short down at this level, which is what most momentum traders are looking to do. Treat that as support. And if anything, it's a long call position or nothing. And it should be that binary. Everything about trading should be, I'm clearly bullish or bearish at that level. It can't be, well, I could be either. Let's see what happens. You don't want to do that, right? So that would probably be the first trigger, although very quick, of the morning. And you can see why. I want to make sure everyone sees why. It's a neutral structure, right? The mechanics, the process are very repetitive. They have to be, otherwise there's no process. We've got our Darvis automatically identified in a neutral environment. And again, some of the knocks against it, it's below the previous session close. And I don't have an oversold reading. So a couple things are good, a couple things are bad. All the more reason to keep a tight stop and smaller position size if taking it at all, right? But it was a confirmed buy, not a short, right? Not puts, definitely calls. And that's the way we're going to go through the remainder of our morning. We're going to take a look at what else could be setting up off levels that we know have typically a high probability of holding. We prefer that there is a probability of moving higher. So let's start diving into our sectors and get into the rest of our morning.